As China becomes globalization's unlikely defender and the Indian economy gets its growth lowered by multiple agencies, is India feeling slightly under the big shadows here in Davos? Let me get you that perspective from a very special panel of prominent corporate voices, Baba Kalyani of Bharat Forge, Manish Kejriwal of Kadawa Capital, and Tulsi Tanti of Suzlon. Thank you, gentlemen, for joining me. Exactly my first question. Is India feeling like the poorer cousin of China, since China seems to be dominating global attention here in Davos?
No, I don't think so. I think, look, Chinese economy has always been larger than the Indian economy for many years. So there's nothing different this year compared to the last 5-7 odd years. I think India has its own role in the world economies. Indian economy is growing at a reasonable pace. I mean, most people that I meet here are getting more and more involved in India. Companies getting involved in the smart city programs that the Prime Minister has put up, the whole digitalization space that is happening, and of course the latest thing is the entire technology revolution coming out of the whole application of Industry 4.0 along with artificial intelligence, smart robotics. This hasn't hit India yet, but I'm sure it's going to be much faster than what we think, and you will see a lot more companies from the West getting into the Indian space. There was a report that came out yesterday which said the largest application for robotics in the world and for Industry 4.0 applications is India and China. So the markets are there, because the largest growth in manufacturing is going to happen in India, even much more than China, in the next 15-20 odd years.
Right, and we're going to talk about the fourth industrial revolution with you, because that's something you're very closely associated on the ground with and a big theme here in Davos. But Manish, first my question is, India feeling slightly ignored? Was this supposed to be our year?
No, I think the unique thing about the year, this year, it's the first time that you've had such a large Chinese delegation. But it's not about India versus China, as Baba was saying. This is very much China's way to step into the world stage at a time that it feels like many of the Anglo-Saxon countries are retreating, given what's going on in the US, which seems to be being a bit more isolationist, and China and the UK, where you've seen Brexit happening with Prime Minister May giving a very strong speech yesterday. There's suddenly a role for China to play in the global stage. So I think it's the first visit by the head, by Premier Xi, and it's a very large delegation. So it's not about them being or India being slighted. It's just this is more about China versus the US and global geopolitics. So I think in that context, the Indian agenda, I think, remains the same. I'm glad we're not, like previous years, splashing the facade everywhere with India everywhere. I think the global investors, financial as well as strategic, believe in India as a huge market, as a source of terrific talent, and that remains. If you talk to the smart corporate investors looking at India, we've seen the level of corporate interest, strategic interest, significant increase. Baba and I were talking about an automotive company that we sold recently to a large Spanish company. Unheard of. Many other strategic guys looking into India, but it's not actually, and I'm glad it's not out there and with fireworks. We're doing it subtly, we're doing it well, and we're being slightly more under the radar as we should.
So there's a big difference between perception and reality. I think Manish is making that point well. But Mr. Tanti, do you feel on ground as well that it's easier to do business now with the new administration, and reforms in some way, while people will scream and complain, are underway?
No, India is really doing and transforming the last 2 years very well, and a lot of policy framework, lot of initiatives like Make in India, Digital India, Startup, Clean India. So all these initiatives are moving in the right directions and the good momentum. As far as the renewable space, I think Prime Minister has set the very ambitious target, 175 gigawatt installation in India, from 25 gigawatt to 175 gigawatt in the next 5 to 6 years. So it will bring a lot of investment potentiality is growing. If you understand the last 2 years what happened in a renewable space, so 2.5 gigawatt to 5 gigawatt and 5 gigawatt to 10 gigawatt. So it's moved the investment $2.5 billion to the $5 billion and $5 billion to $10 billion. In the last 2 years, our sector is growing in India in renewable space 100% growth, which is never in the last 50 years happened like this. So that shows the reality is working on a end. And the biggest challenge on the execution side, it's not just the policy, but the environment on the central government and state government alliance has increased a lot. And because of execution is happening. Otherwise, execution was the biggest challenge. So that is where 10 gigawatt of capacity installation in the 1 year, which last 20 years we have built only just 20 gigawatt. So within a 1 year, 10 gigawatt is going. So its momentum is really very good. Environment is very positive is there. When we are talking about the World Economic Forum areas, China presence versus India, I have a very two clear point is there. What is the priority for China? China has a domestic demand is saturated, where India is focusing more on domestic demand. So we don't require a global marketing much more. And China needed today the product they want to sell in the global market. So their priority is to sell the product in the markets. So their job is here to market the China very well. Our interest is the domestic demands to satisfy. So our interest is to attract the investment only.
Right.
So we require a very limited financial people who can come and invest in our country. I think both has a different priorities, and that's why the visibility is different. But we are leveraging World Economic Forum very well for Indian interest.
And therefore insulated from a lot of external shockers. A quick question to all of you, and give me a brief comment on that. The risks right now for this year. So demonetization is a key theme, much discussed. You can have a different perspective, but huge topic of conversation about being a shock to the Indian economy, a stronger dollar, which everyone envisions with the Donald Trump era, and what would happen to reforms in 2019, because many say that the Modi government will not get the upper house and there could be some kind of stalling. So from these points, to your mind, how would you read that?
In terms of risks, I think the risks are largely external, socio-political, the risks with new governments coming in major countries in the world, the risks of event like Brexit spreading across the EU. Those are the kind of risks, medium-term risks. And then you always have the war going on in Syria and its impact on the geopolitical side. Where does Russia fit in and where does the US fit in? And I mean, we've been having those risks for a long period of time, and I think those risks continue. In terms of internal risks within India, I think as far as demonetization is concerned, my personal view is that's the best thing that's ever happened. Yes, we have had some difficulty in the month of November, December, but I think history will say, when we look back 5-10 years from now, that this was the best decision made. But you could not have made this decision after 5 years. Okay, it's just too big an economy to remove so much of cash from. So I think it's a good thing. Third, as far as reforms is concerned, I think the government is pretty much on track on reforms. I mean, if you look at their perspective plan that they have made, the 2025 perspective plan which has been put into place is pretty much on track.
Okay, on track. And Manish, comfortable with demonetization?
I'm going to get back in the overall context. I think the risks India faces is literally like the ripples on the water in a lake when you throw a stone. It's external risks. I think if you look at what's happening as the US Anglo-Saxon economies are getting more protectionist, Brexit happening, I'm actually very worried about the Middle East. I don't quite understand exactly what's going on, but the different phases between the Shia and Sunni and the complexity will definitely impact. It's already affecting the inflows of capital that our migrant workers have from the Middle East into which our economy depends on. So many external risks. I think internally, actually, we're doing pretty well. And if you look at demonetization as a subsegment of what I think has been the biggest victory by this government has been an attack on corruption. And if you look at what the Prime Minister did within a few months, he essentially removed the safety net from below many of corporate India and put the screws on. And I think in the current context, it really established much more of a level playing field. And in my case, demonetization was absolutely required. Of course, the actual execution, one can complain and done a lot better, but I think people will forget about that. There will be certain sectors like real estate, maybe jewelry, which will be permanently impacted. Jewelry, I don't mind. I'll save me a bit more money on a serious, on a side note. The real estate is later. But on the other stuff, I actually think you will see a huge spurt in April or May. And I think the two big themes here, we had a couple of investments in the retail sector, sales have gone up because there's been an actual move from the unorganized or disorganized sector to the organized sector. So we were very surprised that numbers in November were a little bit hit, but in December we were back to normal and in fact increased because the unorganized was moving to organized. And the second big theme there is the move from rural. So the rural economy has been affected. Baba will know better. Cars were not affected as much, but the two-wheelers and tractors were. But again, that I see when this thing comes under control, April, May, you'll actually see a sort of a hockey stick effect of more demand coming back. And I think by December we'll forget about this.
You feel you're going to forget about it soon, Mr. Tanti?
Yeah, I think whatever the economic environment India is currently is the challenge is there. More externally, what the team has talked is there, but within that also I see the uncertainty of the risk is the oil price. Suppose if that has to move on a upward directions, it's virtually it's not the impact is there. But our economy is heavily influenced by the oil pricing area. As far as the demonetization, I think it's a temporary impact, but it's a longer period. It's a substantial benefit. Like 15 lakhs crore is the cash in the system is there. 1/3 cash will back to the banking system. Not all the goes to the operations. So that availability of the cash systems in the banking system will support to reduce the interest cost, which is more important for Make in India requirement and other things. Second, we can leverage that cash to the 3-4 times and we can invest in our infrastructure investment opportunity. I think that will stimulate longer perspectives of a requirement of the country's economy. It's extremely important part of the. When we are talking about internal risk area, I think next new challenge we have to prepare ourselves on execution part of the GST, because it will be again 6 months. Some turbulence will come. We should prepare for, because any transformation happening, whether it is in our company, whether it is in a country, every times we have see the comfort area doesn't people like to let go. So we have to move from one comfort to the very good comfort area, but transition is always difficult. So we have to prepare for that GST implementation and executions. So that may come some turbulence. But if I see from distance, India whole system is not equipped more than 7% GDP growth to manage. So that is the biggest challenge for us there. And for the continued stability of the economy, I think 7% GDP growth is ideal to manage the Indian economy, and that take care of our job satisfaction requirement. I think that's the moment is very well for the India.
One final point, Namrata, on the demonetization, which I don't want to take away lightly. I think it has truly confused some of our global investors. And it's not just the government's job to explain what happened. I think it's beholden on all of us in every interaction we have is to really understand and explain to our global investors, strategic or financials, on what exactly are the positives. Because the media so far, I don't know, I'm not blaming NDTV, but I'm saying the global media as a whole has normally portrayed this quite negatively. So I think it's not so much good or bad. There's a bit of a confusion. What was done, how is it done, the people standing in lines. So I think it's beholden on all of us to explain the intricacies of that and what is the short-term and the longer-term impacts. But it is a worry, at least the perception amongst our global investors.
Right, raising questions on the implementation, maybe not the thought behind it, but thank you so very much, gentlemen. Looking like the reality on ground is far more optimistic than the headlines suggest.
Thank you.
Thank you.
Thank you.